Let's begin. So yeah, welcome to another Vantage Educational Masterclass. Hey Samit, I just saw you this morning on the other webinar. Hey, nice to see you again, man. So yeah, welcome to another Vantage exclusive webinar. So today will be about the Momentum Masterclass 2 out of 2 on ADX correlation and Heiken Aishi candles. So I just got to read the disclaimer first, so do bear with me. So the information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter, which is myself, and not necessarily those of Vantage. And they are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. So Vantage does not guarantee the accuracy or reliability of the information provided. So attendees should note that sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice. So just to share, let me turn on the... Okay. Just to check whether you guys can see this screen. So I'm heading towards the Vantage Markets website. So on the Vantage Market website, just a quick share. If you want to find out more about webinars like this, free educational webinars, it's under Education and Tools, Education Webinars. And then you can scroll down. So like for today, it's under 31st of January, Momentum Masterclass. Then you can register from there. So I'll just send the link to the chat so you guys can refer to that for future webinars. So tomorrow, Wednesday, Thursday. So Thursday, 5 p.m, we have another trading strategy clinic. Okay, just to let you guys know that all these sessions are audio recorded and it's being live streamed. If I'm not wrong, it's being live streamed on YouTube at the moment. So yeah, it's right here. So I'll copy link address. So you can actually check this out. This is Vantage official YouTube channel. Okay, let us begin. Okay, let me hit back. Okay, very quick introduction to those who don't know who am I. I'm actually Chen Yongjing. You can actually see my name here. So in this photo, I do not have a very good hairstyle and the photo looks quite bad. So yeah, I'm going to retake again. I retake another photo again. Hey, hi there, Sumit. We meet again. Yes, I've seen you this morning only. Nice to see you again, man. So I'm from Everest Fortune Group, and I'm the prop trader for the company. And this is the chief trader, Desmond Leong. And this is our main fundamentalist guy, Jin Dao. He's a very good fundamentalist. He does everything out well nicely. And then he's also a very good trader, very good scalper. So if you guys do not mind, you can actually find out more about me. Here. So I'll send the link there. You guys can check me out. So if you want to contact me after this webinar, any questions that you do not understand, contact me via there, find out more about me. It's like my portfolio compressed into a tiny little link. You can click on it and check things out. So we also have Jindao's trading view. If you guys are interested in where the DXY is going. So he actually wrote quite a nice idea that he published on TradingView. So also can check this link out, give it a boost it up. I mean, boosting is free, to encourage him to write more free stuff for everyone. Okay, let us begin. So a few topics just to cover for today. Hey, no problem. A few topics just to cover for today. What is ADX? What is Heiken Aishi? How do we actually combine them together to find a better confluence, better trading, to find better trades? And how do we use correlation to filter good versus false or fake breakouts? Let us begin. So what exactly is ADX? No problem, man. No problem, Sumit. Okay, So I'm actually talking to Sumit via the Zoom chat. I've turned it on so everyone can chat there. You have any questions, if I'm going too fast, if I'm going too slow, just let me know. So what does ADX mean? It actually stands for Average Directional Index. And it's a tool used to measure the strength of a trend in financial markets. So you think of it like a thermometer for the market. The higher the ADX value is, the stronger the trend. So it ranges from 0 to 100 with values above 50, indicating a strong trend. Simply put it, the ADX actually helps traders determine whether the market is trending or ranging, allowing them to make informed trading decisions. So also, it's not very important just to let you know how the ADX is actually calculated. So it's actually, the ADX is calculated based on the difference between two exponential moving averages or price range expansion. It's important to note that the ADX only measures the strength of a trend and not its direction. This means that it doesn't tell you whether the trend is bullish or bearish, only that there is a strong trend in place. So when the ADX is below 20, it's typically considered a weak trend or a range-bound market. So a market is in a range, the ADX value hovers around 20. So I'll show you guys an example in a bit. So a value above 50. So you only take note of this, 20 and 50. Just got to remember that if you are using ADX. Value above 50 indicates a strong trend in either direction. So if it's trending up and then the ADX is moving above the 50 value, so it's a strong trend. So it's pretty similar to RSI. RSI is above 70, overbought. Below 30, it's oversold. So for this ADX above 50, it's a strong trend. So this information can be used in conjunction with other technical indicators to determine the best time to enter or exit a trade. So in summary, just overall, just a very quick conclusion on ADX. It's actually quite a valuable tool for traders and investors to assess the strength of a trend and help them to make informed trading decisions. So by monitoring the ADX value, traders can actually identify strong trends and potentially profit from it. So let's take a look at an example of the ADX. So if you noticed that when price is within a range like this in this specific scenario, you actually notice that the ADX, it's around 23.5, around the 30 range. But once price shoots up, we have a bullish trend right here. It went above the 50 value. So it actually indicated that the trend is strong. So actually in the long run, price actually continued moving bullish upwards. Okay, this is just very quick example. I'll show you guys also the what do I call it? Indicator. I'll show you guys the indicator on TradingView. All right, let me get this out. Okay, let's take a quick look at it. Okay. So just by looking at the TradingView, so I'll clear everything out. Is this my template? Okay. You can actually go under indicators on TradingView, search ADX. Hey, hi there, Doris. Just saw you coming in. How are you guys doing? So by the way, where are you guys from? Just let me know. So I'm actually, before we continue, have a serious discussion. So I just want to ask you guys, where are you guys from? I'm actually from Singapore. So I'm not sure where the rest of you guys are from. So we have Amit, Kumar, Brandon, Doris, John, and Sumit. Just let me know in the chat, where are you guys from? Yes, Muhammad Sajid. Okay, you recommend, yes, definitely. Best trading platform you recommend, you said Vantage. Well, yes. Okay, nice. Hey, Doris. So I'm actually replying Muhammad Sajid on YouTube. We are actually streaming live from there also. So his chat might not be appearing in these Zoom chats. Hey, Doris. Okay, you are from Belgium. Wow, that's actually very, very far. Wow, it's very far from me. So Amit, I guess you are nearer. India, very near, quite near. So I'm from Singapore. You are from Newry. Let me check, where is it? Okay, it's the first time I've actually heard about this place. Okay, it's a city in Northern Ireland. Wow, everyone is all over the world. Okay, I really appreciate you guys for joining me. So, wow, okay, somewhere in Dublin. Okay, let us continue. So you can actually search ADX on TradingView, Average Directional Index. Click on it. What happens? You notice that you have this RSI looking thing that actually appeared at the bottom of the chart. So in this particular scenario, we have nothing. We want price to be above the 50 line. I'm not sure whether we can customize this. It would be better if I can customize this. Okay, nope. So, okay, let me draw horizontal line at the 50 value. So coordinates 50. Anything above 50, it's a strong. So I just add a text in. Above 50, it's a strong trend. Okay, let me increase the size. Above 50, strong trend. And below around 20, it's a range market. Pretty much in a range. So rangy / weak trend. Okay, I just have a bit of OCD. I like things to be very, very clean. Weak trend. All right. Okay, next, let's continue. Okay, maybe we don't have a proper example here yet, so maybe we can move on to likely go. Let's take a look at go. Okay, watch, go. Maybe we can find some strong trends right there. Okay, I need to copy it out. Wait, give me a moment. Okay. Control C. Okay, let me copy it over to Go. So this area, copy. This, okay, not sure. Okay, never mind. I'll just use back EU. All right, let's move towards the 15-minute chart. Let's find something. Okay. So in this specific scenario, we actually saw that go on EU, price actually broke above the 50 area. So it actually indicated that the trend was a very, very strong bullish uptrend. So you can actually use, this what, let me draw a line, a horizontal line first, a vertical line. So notice right here, the crossover. So it's above 50, indicating a strong bullish trend. So you can use it to follow the market, follow the bullish trend. Start to look for a possible buy scalps. Maybe looking for retracements, and then you can look for buy. But I know that in the long run, price actually started to falter, started to fall down, turned bearish. So let us take a look. It actually moved up quite a bit. It's about 37 pips, 40 pips. Pretty much more than enough for an intraday scalper. So maybe I should do a replay. I'll start moving towards the 1-minute chart, hopefully looking for some strong, nice entries that we can take a look at. So in this particular case, price actually went up quite high, So it's above, let me just write this out. It's above on the M15, above the ADX 50 value / strong trend. Okay, horizontal. I think I should turn it red. Okay, maybe red. All right. 20. M15 line. All right. Should I put it on the top? Okay, top right. So M15 above the ADX 50 value, indicating a strong trend. How could we possibly, likely enter a trade? So for me, let me type it out. For me personally, okay, I'll write personal trading method. So I'll just show you just a very, very quick example of my personal trading method. I actually use smart money concepts for my trading. I rely on it a lot, such as it has things like liquidity, supply and demand. I'm sure you guys have probably heard about it before, supply and demand. Also have market structure. So market structure is very important also. So that's the basics of smart money concepts, just about it. All right. So I'll be showing you guys how I can possibly enter this trade. So how a market structure works, I always look for price to clear some sort of liquidity area before it breaks structure and starts going towards the upside. So I just draw a line. So maybe we have a demand or a supply area. So let's say there was a demand area here. Okay, green. Just an example. Demand zone. Inside, center. So how I would do is I'll wait for price to tap into the demand zone. So in such a situation, likely here, there could be a demand zone right there also. Price tap in. Very, very nicely with this tiny, tiny tap. Next, I'm looking for price to break structure. So I look at its price to break structure here. So I'll just put it as an X there. Okay, so it's pretty clear price has broke structure. That is when I start looking for a retracement entry towards the upside. Okay, let me just find possibly broken structure here. So in the previous, even a minor high is included. So even if you let's say maybe you want to look at the higher side. Broke structure, potentially you can look for an entry using a Fibonacci line from the bottom of the swing high to the high. So maybe I can enter at the 38.2% level. So to not make it so messy. So likely you can possibly enter there. I'll see how it goes. Enter along there. You have a target somewhere on top. So let's do a one-to-one risk to one-to-one trade just for an example. So let us start the replay. Okay, price actually went higher. So I'll just adjust. So you notice that as price moves higher, I'll start adjusting my Fibonacci line higher and higher according to where price is moving. Okay, price tapped into my entry at the 38.2% Fibonacci line. Potentially one-to-one. Let's see if it works out. It might not. Okay, if this is a bad example, hopefully it works out. Also, I got to find another example. 10 times 10. Okay, this did not work out. So let me find another example, a proper example. Okay, let me fine tune this. So if actually draw, okay, pardon this very, very dumb entry. So actually, if you actually draw a Fibonacci, you draw a market structure, how it works. Goes up, breaks. So even a minor high, just now you guys already saw, I actually talked about that minor high there. Even a minor high that is broken could be considered a break in structure. So it actually looks like this on the chart. So let me replay it all the way back. Okay. So we have a break right there. Tiny break. So I would set an alert. Set an alert right there. Okay, wait, let me clear this out. Okay, we have an alert. So price continues moving up. So the moment price breaks structure, broke structure right there, what I can do is potentially, as I mentioned, either 38.2% area or 23.6. So in this specific situation, you can enter at 23.6 just because there is actually a tiny market inefficiency area. So market inefficiency, BFFICIENCY, market inefficiency area. How do we see a market inefficiency area? There is a gap right there. So price taps into that gap. Potentially we can look for price to be respecting that area. So 5.1 is to 5.1 risk to reward right there. Okay, this is a very quick take profit. Just a very quick example. I know just now the example I showed was bad. So yeah, do forgive me for that. Okay, I'll just draw it out. 1-to-1 risk to reward. So I'll just screenshot this down. I'll send it to the chat. Okay, Summit, you actually asked you are waiting for a supply and demand webinar also. Well, I've already brought up that suggestion regarding supply and demand webinar. So hopefully they can bring it to fruition. But meanwhile, I'm actually sharing my views on supply and demand a lot on that Linktree link that I actually sent earlier on. So guys can check this link out. If you follow me there, I'll be sharing a lot. Okay, so just to show you, I actually did an analysis on EU earlier on this week. So I actually kind of forecasted thinking that EU will likely tap into that 61.8% area within this week. So just before this webinar started, price just already tap into that area. So I can actually share my views. Everything is free. I actually take my time. So during the weekends, if you follow me, I post it on the weekends so you can look ahead. So even for the DXY, the US dollar currency index. So I wrote some simple fundamentals. Hopefully you guys can understand. So you guys can read this. So I actually forecasted if the core PC price index was better than expected, price could possibly cause DXY to continue moving bullish. So take a look. Price went up, retested, and it continued moving. So it's currently heading towards that area that I marked out last week. Okay. This area, yeah, another forecast on the daily. See, take a look. Price actually tapped into my point of interest before it reversed back down. So I try my best to actually show you guys high probability setups. High probability setups, not those setups that you see other creators, they just post it for the sake of content. But I only post when there is a proper setup in place. No point forcing an analysis if it's wrong. Okay. Okay, let me find another example. Okay, I'll exit this replay. Okay, moving back towards the M15 chart. Okay. Okay, next let us move back towards the PowerPoint. So far, any questions regarding the use of ADX? You guys roughly got an understanding of it already? It doesn't tell you when to buy or sell. It just tells you when there is a strong trend. Okay. Okay, next, let's take a look. Okay, next, what is the Heiken Aishi? So Heiken Aishi is actually a chart in technical analysis. So it also shows the it also shows the average price of an asset over a set period of time. So the chart is constructed by taking the average of the open, high, low, and close prices of an asset. So the resulting chart is smoother, and it actually eliminates much of the price noise found in traditional candlestick charts. So the Heiken Aishi chart can also be used to identify trends and make trading decisions. So also just for extra information, the Heiken Aishi charts are used by many traders and investors as an additional tool to help them make informed decisions when buying or selling an asset. So it's important to note that Heiken Aishi should not be used in isolation. That means it should not be used alone, and it should be combined with other analysis methods such as trend lines, supports, resistance levels, and other technical indicators, just to name a few. So in a traditional candlestick chart, it can be difficult to distinguish between short-term price fluctuations and long-term trends. So it's all the charts that we are looking daily, that's the Japanese candlestick charts. This is because the traditional chart can be quite noisy, with many ups and downs that can distract from the overall direction of the price. So Heiken Aishi, it eliminates much of this noise, making it easier to see the bigger picture and identify trends. So when you look at the Heiken Aishi chart, something like that, how the chart looks like, it looks slightly different from how a candlestick chart actually looks. It's going up, it's all green, there's no red. If it's going down, then it's fully red. So when you look at the Heiken when looking at the Heiken Aishi chart, it's very important to pay attention to the color of each candle. So if the candle is red, it means that the close price is lower than the open price, indicating a downtrend. So if the candle is green, it means that the close price is higher than the open price, indicating an uptrend. So by analyzing the sequence of red and green candles, traders can determine the overall direction of the trend and make informed decisions. So in conclusion, Heiken Aishi charts provide a unique perspective on the price movement of an asset. So it actually helps traders and investors make better decisions, eliminating most of the noise, and provides a clearer view of the underlying trend. And it also helps traders, find overall direction of the market, same thing. So let's move on. You guys take a look. That's how the Heiken Aishi chart actually looks like. So next, let's move on. How to use the Heiken Aishi. If you noticed, it's all green, uptrend, all red, downtrend, all red, downtrend, all red, downtrend, all red, downtrend, going bullish. If it's going bullish, uptrend all the way. So it eliminates all the noise, giving you a clear direction on where price might possibly head to. Okay, let me check. Okay. Let's move on. Okay, maybe I should show you how to use the Heiken Aishi first. Okay, just a quick look at this. So let me just hide the ADX first, to not confuse you guys. Okay. Let's take a look. You can turn on Heiken Aishi from the top. So it's beside indicators, beside where you choose your time frame. Click on that candles and then you move on to Heiken Aishi. So you actually notice that the candles has changed color, eliminates most of the noise. So it's showing you a pretty clear direction on where price it's heading towards. So right now, if it's all red, potentially we can look for shorts on EU. So let me take a look at this ADX thingy. Okay, so right now we are moving on next towards how to, where is it? Okay, got it. Moving on next, how to use them together. So just a quick recap on what we have went through so far. The average directional index, the ADX, it measures the strength of a trend, while the Heiken Aishi is a type of candlestick chart that filters out market noise, providing a clearer picture of the trend. So by using the ADX and the Heiken Aishi together, so traders can actually confirm the trend strength and identify potential entry and exit points with greater accuracy. So the ADX helps to determine if a market is in a trend or range, while the Heiken Aishi helps to identify trend direction and potential changes in trend. In a strong uptrend, the ADX will be high and the Heiken Aishi candles will be predominantly green, indicating buying pressure. So it's indicated like that in the charts. So in a very, very strong downtrend, the ADX will be high and the Heiken Aishi candles will be predominantly red, indicating selling pressure. So, okay. Let me just take a look. Okay. What else? Let me think. What else do I have to go through this? Okay. The combining of these two technical indicators, the Heiken Aishi and the ADX, overall, in short, in summary, it can provide traders with a more complete picture of the market conditions, leading to better informed trading decisions. So you can actually try it out. So after this webinar, or right now during this webinar, you can consider using ADX and Heiken Aishi together. You can test it out, back test it. Do not jump right in, trading real money without back testing out your strategy, especially with a new strategy like this, combining ADX and Heiken Aishi. So you noticed, just like I mentioned, in a range, it's at below 20. When it's in a solid range, if it's above 50, a solid number, that 50 is a strong trend. Also indicated by the Heiken Aishi candles. All right, any questions so far? Let me know. Feel free to ask in the chat. I'll try my very, very best to answer you. So I'll just take a short breather. I'll just drink a bit of water. All right, Summit. He said, all clear. Okay, let me continue. Give me a moment. Okay, let us continue. Okay, next, how do we use correlations to filter good versus false breakouts? So first, what is correlation? Correlation, so the first one, determine the trend. So determining the trend of the asset price movements by plotting a line graph or using moving averages. Just an example. So how do you filter good breakouts? A good breakout is when the price of an asset moves in the same direction as the correlated asset. So this indicates that the move is backed by market sentiment and is not just a false breakout. So filtering bad breakouts. A fake breakout is when the price of an asset moves in the opposite direction of the correlated assets. So this indicates that the move is not backed by market sentiment and is likely to be temporary. So you can actually use correlation as a confirmation tool when making trading decisions. So if a trend is correlated asset supports your trade, it can provide additional confidence in your decision. So it's also very, very important to monitor the correlation. So the strength of the correlation between two assets can change over time. So it's important to regularly monitor the correlation coefficient to ensure it remains relevant to your trading strategy. So just an example. Okay, let me see an example. Hey, no problem, John. Dodge Stongs called me by my trading view name. Yes. So another example. So Euro. Okay, so maybe I'll just give an example. Bitcoin and Ethereum, they are correlated. So if Bitcoin goes up, Ethereum also goes down. Okay. Next. If Bitcoin is going up, but okay, let me repeat myself again. If Bitcoin is going up, but Ethereum decides to go down, then it's likely a fake breakout. A false breakout, fake breakout, because Bitcoin and Ethereum are correlated. Okay, give me a moment. Okay, so if they are not correlated and it shows a negative correlation suddenly, it could be a fake breakout driven by short-term events such as central bank intervention or geopolitical tensions. So it might be a news event that actually cause it to happen. So in conclusion, using correlation analysis to filter good versus fake breakouts can help make traders make informed investment decisions, avoid costly mistakes. So by keeping an eye on the relationship correlation between different assets, you can increase your chance of success and in the financial markets. Okay, so yeah, any questions so far? Oh yeah, John just left, he got to go. Hey, no problem, man. So let me just check out my trading view. Okay. So yeah, any questions so far regarding, using Heiken Aishi, using ADX, just let me know. Okay, I'll just sit down. Let me check YouTube. Is there anyone talking? Okay, we have Muhammad Sajid. He was watching. Vantage Plus. Okay, I'm just checking YouTube because I think I got to check the comments. Give me a moment. Okay. All right. Okay. Let us move back to the charts. Bloomberg. Okay. So if it's in a very, very strong downtrend, potentially I can start to look for potential shorts. Okay, I think I should open back up my ADX. Let me pull it up. Okay, so rangy weak trend at the moment. So maybe on the 15, 5 minutes, 1 minute. So price is currently, so if I'm actually scalping, looking for shorts, let's say right here, using the Heiken Aishi. Let me get the vertical line out. So at this point in time, you notice that price is already above the 50, which is indicating a strong trend. So what actually happens next? Potentially, it helps to add confluence to the sell that you might potentially be looking for. So it's in a downtrend. So let me add the confluences. Add confluence to a sell, confluences in place. Okay, I should retype this. Confluences in place. First, we have the Heiken Aishi candle red. Next, we also have the price above the 50 ADX. Okay, so right now, if you're looking for retracements, just now as I mentioned, likely you can enter at a 38.2%. So if price actually retraces back up, take a look, 38.2%, very, very nicely, drawing from the top to the bottom because of this entire break in structure right there. So you can actually enter, took a shot somewhere there. You know, I know the risk to reward is not the very, very best. So in such a situation, heading down, it's not bad, 1.1 risk to reward. So can risk 1-to-1. Even if 1-to-1, you would have hit, take profit. So this is a 1-to-1 risk to reward entering at the 38.2% Fibonacci line. Okay, let me find another nice example. Okay, before I do that, I should screenshot for you guys. Okay, copy link to chart image, copy link. So example of combining ADX plus Heiken Aishi on euro dollar 1 minute charts. Okay. So I just sent the link to a chat already. I should also send it to the YouTube channel. Okay, so this is the example of combining ADX and Heiken Aishi on euro dollar 1 minute chart. All right. Let us find more examples that we can take a look at. Okay, find a very, very strong trend. Okay, this is not the best, because if I'm looking for a better correlation, I'm actually looking for the green color Heiken Aishi candles to be green all the way instead of red, green. So it's actually not a good confluence. So I will not be using this example. I'm finding one that is above. It is above, but it actually didn't move much. Likely clearing out something. Okay, this is likely a good example. Okay, here also good example, price above, strong trend. Okay, I shall use this. Okay, price being above the ADX 50 value right there, and also combining with the Heiken Aishi, green candles on a strong bullish trend. So let me change it. Strong bullish trend. You can start to potentially look for longs. So even on the daily, you got to combine multiple confluences. Even on the larger time frame, daily, 4 hours, 1 hour, you can start to have a price target in mind. So as I mentioned, you can likely look for maybe a 38.2%. Is it 38.2% right here? So it's actually very, very nice. 38.2% retracements, drawing from the bottom to the high. So it actually entered right here, would be nicely at the 38.2% level. So let me see whether it works out. So 38.2% stop loss, maybe below the previous swing low. Aim for likely 1-to-1 risk to reward, and it still works out. Risking 22 pips, and you still get back 22 pips. Okay, let me screenshot this down, send it to chat. Copy link to chart image. Okay. So this is another example. I'll just label it out. Another example. Okay. So yeah, let me find more. So looking at this specific scenario, price actually was in a strong downtrend. So if you actually draw a vertical line right there, you notice that price is on a bullish and on a bearish trend. So you draw a line down, very, very bearish. So we can start to look for potential short entries, potential sell entries. So drawing the fib, likely from the top to the bottom, maybe we can get a nice 38.2% level. So notice didn't tap 38.2%, so I draw lower. Entered very, very nicely, almost looks like a sniper entry. Short position, aim for maybe 1-to-1 risk to reward with 10 pips, so you got to aim for another 10 pips, and it still works out pretty well. 10.3, you still get a 1-to-1 risk to reward right there. So I'm just drawing it out. Fibonacci line draw from here to here. Same thing, I will screenshot this down and send it to the chat. So I'll just delete this old Fibonacci thing first, in case it messes things up. All right. So yeah, screenshot this down, copy link. It's not copying. All right. So yeah, any questions so far regarding this? Everything good? Everything clear? Is it very, very clear on the Heiken Aishi together with the ADX above 50? Okay, good, good, all clear. Maybe I'll find 1 or 2 more examples, just to straighten things out more. So this is actually not a good example. I wouldn't say it's a good example because overall, likely there was a point of interest down below. Price was looking to reverse somewhere. Okay. This is a downtrend. You wouldn't be selling in a downtrend. Let me find another solid example. Okay, this one already dropped too much. So if I'm actually trying to look over here, I wouldn't be using this example because of this massive drop already. So if I'm looking to sell, my stop loss would be all the way up. Then the risk to reward wouldn't be worth it. So I find another better example. Another one. Okay. This is not bad. Not bad, but the retracement, I noticed it didn't hit the 38.2%. So this trade actually this trade right here wouldn't have worked out because the Fibonacci line drawing the 38.2%, it wouldn't have tapped. So this is an example that wouldn't have worked out. Let me find another one. So you notice there's not many trades. You guys got to wait. Different strategies has different number of chances you can take to enter a trade. Okay, this might not be bad. So we have quite a nice drop. Quite a nice drop right there. I'm not sure why it's not drawing. Quite a nice drop right there. We also have a confluence with this Heiken Aishi being fully red, indicating a downtrend. So next, you can actually draw a Fibonacci line from the top to the bottom. You take a look, price tapped very, very nicely within the 38.2%. Why 38.2%? Well, it's my personal backtest. There is no strategy out there that is talking about you guarantee must sell at a 38.2%. It's just something that I actually noticed. So short position, you would have kind of sniped the 38.2%. So I don't think this would be a nice 1-to-1 risk to reward. So it actually stopped you out. It wouldn't have tapped 1-to-1. So you guys actually just get what's going on, roughly get what is going on. So I'll still screenshot this down as a possible example. So at the end of the day, you still got to manage your trade. So do not care if it's 1 or 2 pips away, even if it's a negative risk to reward. As long as you profit, end of the day, that's all. That's what everyone cares at the end of the day. Nobody cares whether your account you are doing a negative risk to reward. They care more about what is your portfolio. End of the month, are you profitable? That's what everyone cares about. So copy link to a chart image, that could be another possible example. So yeah, any more questions, I'll give you guys another minute or so to ask me any more questions before I end this webinar. Just let me know. All right. So yeah, in the meantime, I've been taking it very, very cautiously this week because on Thursday at my timing, Thursday 2 a.m., there's the FOMC meeting. So the FOMC meeting is actually quite, I would say I'll be quite cautious about entering any trades. Wait, let me check the YouTube channel. I've only entered one trade this week so far. And this Friday, we have the NFP. So I'm very, very risk off. So I would only enter a trade if there's a very, very high probability this week. So much movement, so much rate news going on, high impact news. I do not want to potentially lose a trade just because I'm greedy. So I'll be trying my best to stay out. So today, no trade so far from me. So I got nothing to recap with you guys today for the London session. So yeah, if there are no further questions, I would like to thank you guys for joining me. So I appreciate you guys coming on, staying throughout the 1 hour, learning about the Heiken Aishi and the ADX. Okay. Okay, let me check. Okay. So yeah, appreciate you guys for joining. I'll see you guys in next webinar. So next webinar is likely Thursday. Hey, no problem, Sumit. No problem. All right. So yeah, I'll see you guys again. So thank you, Brandon. Thank you, Doris. Thank you, Sumit. Thank you, John. Then okay. Appreciate you guys for joining. I see you guys next time. Stay safe trading. I'll send one more time in the chat. FOMC news Thursday. Then we have the NFP Friday. So if you want to train your own discipline, self-discipline, try to hands off, stop trading on Thursday and Friday. So tomorrow would be your last day you're trading. And somehow, what is the worst thing about today? Today is the last day of the month. So last day of the month, things can happen. The monthly candle is closing. So do take care trading today and tomorrow. What is going on tomorrow? Wednesday. Wednesday is the first day of the month. So this entire week is something that I would like to hands off, try not to touch. So likely I might be stopping my trading for this entire week already. Today, first day of the month, first thing, that's not a good thing. Last day of the month, I mean, tomorrow, first day of the month, Thursday FOMC, Friday NFP. Very, very volatile week. Stay safe trading. If you want to trade, please make sure that it's a very, very high confluence trade before you even enter any trade. Do not force a trade if there isn't any. All right. So yeah, take care. Take care and goodbye, guys. I'll be ending the stream now.